So here's something interesting. When most people talk about the South African property market, they point to places like Cape Town's Atlantic Seaboard or Johannesburg's Sandton. But while we've been obsessing over million rand penthouses and luxury estates, something remarkable has been happening right here in the townships on the edges of our major cities. In fact, we're witnessing a property revolution that involves 2.5 million people, billions in property value, and a completely different story about who's buying, what they're paying, and why this matters for South Africa's economic future. Now, this isn't your typical property market analysis. We're diving into deep data from Lightstone and BetterBond, data that reveals how Soweto, Umlazi, where I am, and Khayelitsha have become sophisticated property markets in their own right. In fact, in this video, we're going to unpack who these buyers are, what drives their investment decisions, and why women are actually leading the charge in this regard. Most importantly, we're going to explore what this means for the future of property investment in South Africa and why ignoring these market trends might be the biggest mistake that investors are making right now. To fully grasp what's going on here, you need to understand the sheer scale that we're dealing with. Soweto houses 1.5 million people. That's bigger than most entire cities. And Umlazi is 486,000 residents and Khayelitsha is 520,000. And you're looking at a combined population of 2.5 million people. These aren't small suburban developments. These are massive urban centers with their own economic ecosystems. Even more interesting, while Soweto is the oldest and the largest township, having its roots stretch back all the way to the early 1900s, Khayelitsha is the growth story here, one that should have every property analyst paying close attention. Founded only in the mid-1980s, it's experienced 40% adult population growth over the past decade. Compare that to Soweto's 25% growth and Umlazi's modest 10% growth, and you start to see migration patterns that are reshaping South Africa's urban landscape, or even township landscape. The thing here is that this isn't random movement. It's economic opportunity driving demographic shifts. Khayelitsha's explosive growth reflects what economists call the Western Cape magnet effect, where people migrate towards perceived economic opportunities. Meanwhile, Umlazi's lower adult population percentages of 66% compared to 75% in both Soweto and Khayelitsha tells a story of young adults leaving KwaZulu-Natal for opportunities in Gauteng or even sometimes in other provinces like the Western Cape, Mpumalanga, etc. What patterns are you seeing in your own townships and areas when it comes to this type of migration and also property demand? Drop your observations in the comments and let's start to talk about this. When we take a macro view of household income across these townships, the numbers tell an even more interesting story. Soweto emerges as a clear wealth leader with over 20% of households earning more than 13,000 rand every single month. Similar to Umlazi, but dramatically different from Khayelitsha, where nearly 60% of households earn less than 6,500 rand per month. That's for an entire household. Another thing that I've noticed is how these figures compare to their neighboring cities. While 25% of Soweto residents earn above 13,000 every single month, in Johannesburg that figure jumps to over 70%. Similarly, dramatic gaps exist between the other townships and the other cities, with Cape Town properties averaging 7 times more expensive than those in Khayelitsha. Johannesburg 3 times more than Soweto, and Durban double that of Umlazi. But don't mistake this for a poverty story. What you need to understand here is that we're looking at the affordability differentials that create incredible investment opportunities, almost arbitrage. A property that costs 585,000 rand in Soweto would average around 1.75 million rand in Johannesburg. That's not just a price gap, that's an entirely different economic reality that smarter investors are beginning to recognize. The property values themselves reveal the sophistication. Most houses in Khayelitsha are valued between 200,000 and 400,000 rand, while Soweto properties typically range from 400,000 to 700,000 rand. But here's the real thing. Soweto has 1,600 properties worth over 1 million rand, while Khayelitsha has none. This isn't about basic shelter. This is about a property market with genuine wealth accumulation happening at the top end. But how do you think that these price differentials will change over the next coming decades? Share your predictions and your views below. The best angle to see this market transformation is through who's actually buying these properties. The data from BetterBond completely destroys the stereotypes about township property buyers. The average buyer is 38 years old with a household income of around 43,800 rand. These aren't desperate first-time buyers scraping together things like deposits. These are established professionals making strategic investment decisions. In fact, take a closer look at the age demographics. 52% of township buyers are between the ages of 30 and 39. Less than 10% are under 24. This isn't student housing or starter properties for young adults, those just entering the job market. These are prime working age adults at their peak earning potential, choosing township properties over more expensive city alternatives. In fact, how I actually want you to see this whole thing is through a lens of financial intelligence rather than desperation. To afford a 750,000 Rand bond, which represents 65% of all township property transactions, you need a gross household income of around 27,000 Rand. These buyers have that and more, with the average sitting at 43,000 Rand. They're not stretching to afford these properties, they're choosing them because they have economic sensibility. What's even more revealing is the geographic concentration. Protea Glen and Soshanguve accounts for 86% of all township bonds registered with a company like BetterBond. This isn't random distribution, it's market intelligence driving buyers towards specific areas with the best combination of affordability, amenities, and growth potential. But actually for you, this is a question. Which township areas do you think will emerge as the next hotspots? Let us know down below and maybe we can scoop up a great investment. But there's another turn to this property analysis thing that we might have missed entirely. Women are driving 55% of all township property purchases. This isn't just a statistic. It's a fundamental shift in South African property ownership patterns, one that has massive implications for how we understand wealth building in these communities. Women are buying more. The numbers also tell us an interesting story when we take a closer look at the motivations. According to BetterBond's research, many of these women buyers are young professionals or single mothers investing in family homes. But they're not just buying properties. They're spending more on their township properties than their male counterparts. This suggests a different investment philosophy altogether, one that focuses on long-term wealth building rather than short-term speculation. Another thing that's in the data is how women buyers are distributed across age groups. In Khayelitsha, both bond applicants for properties in the 200,000 to 500,000 Rand range were under the ages of 25 years old. Meanwhile, in Sebokeng, all buyers fell between 30 and 39 years old. This shows that women entering the market at different life stages with different investment strategies. The broader context makes this even more significant. Nationally, women buyers decreased by more than 50% due to the high interest rates and the cost of living pressures. But in townships, they continue to dominate the market. This resilience suggests that township properties represent something different, something that's not just housing, but a wealth-building strategy that women are pursuing even in challenging economic conditions. But what do you think is driving this female-dominated investment trend? Are there specific advantages that women see in township properties that others may be missing? Let us know your analysis down below. There's a different side of viewing this township property thing, and it's through the lens of investment performance. The numbers become a little bit compelling when you start to see this. Athlone provides the clearest example of what's possible. Average property value doubled from 750,000 to 1.6 million Rand over just 1 decade. That's a 113% increase in 10 years, or roughly 7.8% annual growth. Not far off from what you'd expect from equity markets, but with the security of property ownership and tenure. The thing here is, performance is happening across multiple townships with different characteristics. This is something we have to understand. Tembisa saw average registration values jump from 284,000 Rand in 2013 to 717,000 Rand in 2023. 152% increase. Mamelodi moved from 232,000 Rand in 2013 to 687,000 Rand in 2022, representing a 195% increase in just over 9 years. What you must also note here is that these aren't isolated success stories. They represent systematic appreciation happening across different provinces and economic conditions. While property transfers in Soweto and Umlazi have been trending downward for over the past decade, values have sustained their upward trajectory, suggesting a maturing market where quality is beginning to matter a little bit more than just quantity. But what you also need to see, what we've been witnessing, is that there's an emergence of genuine property markets with price discovery, investment sophistication, and even wealth accumulation that's happening here. The fact that less than 14% of bonds exceed 1 million Rand, with only one above 2 million Rand in the 6-month period, this shows that a market that's still accessible to middle-class investors while demonstrating a clear upward mobility. Have you even considered township properties as part of your portfolio? Let us know down below and where you're looking and how much you're buying for. And maybe we can discuss these investment opportunities in the comments. There's also another angle to consider in all of this, how major retailers and infrastructure providers are responding to this market transformation. For instance, ShopRite's aggressive expansion into townships, including rolling out their 60/60 delivery service in areas like Soweto, signals corporate recognition of spending powers in these township communities. The corporate investment story extends beyond just retail. Government-driven upgrades in Soweto have included middle-class housing developments and even lifestyle estates. Umlazi has seen formal housing areas like KwaZet and BB sections attracting both government and private property investors. Even places like Khayelitsha, despite being dominated by informal and RDP housing, they're seeing infrastructure improvements that support this rapid population growth. Truth be told, infrastructure follows economic activity, not the other way around. When major corporations invest in township infrastructure, they're betting on the long-term economic viability of these communities. That's not charity. It's business strategy based on data about spending power and growth potential. The data shows that a 52% rise in the house prices in Soweto between 2013 and 2018, which attracted attention from investors looking to capitalize on areas with lower cost of living and better accessibility than traditional affluent suburbs like Midrand, Soweto, and Sandton, and even the likes. So, as we wrap up this deep dive into South Africa's township property revolution, the broader implications start to become a little bit clearer. We're not just looking at alternative housing markets here. We're witnessing the emergence of a parallel property economy that now and in the future will represent genuine wealth creation for South Africa's emerging middle class, even those coming out of the townships. The combination of strategic location, affordability, and appreciation potential creates investment opportunities that the mainstream property market has largely ignored. When a 38-year-old professional with a 43,000 Rand per month household income can purchase a property in Protea Glen for 560,000 Rand, that might have cost 1.95 million Rand in nearby Johannesburg. That's not a housing choice. It's a wealth building strategy. More money left in their pockets to invest. The female-dominated buyer profile adds another dimension to the story. Women leading 55% of purchases suggest that a different approach to property investment in altogether is taking shape. One that's focused on community building, family security, and long-term wealth accumulation rather than short-term speculation. Particularly Khayelitsha's 40% adult population growth. These suggest that these markets will continue evolving. As infrastructure improves and corporate investment follows, the gap between township and city property values may start to narrow, creating substantial returns for early investors who recognize the potential early on. The question isn't whether township properties will become a legitimate investment class. It already is one, and too expensive for the returns that we're seeing today. But what's your biggest takeaway from this analysis, and how might it change your approach to property investment in South Africa? I'd actually love to hear your thoughts in the comments below. And let me know if this perspective on the township property market has surprised you in any way. Thank you for watching this video up until this point. I hope it was interesting for you to watch, just as it was for us to make for you. Check out one of these other videos and hopefully they'll be just as interesting as this one. Cheers from Umlazi.